Chairman, shareholders, directors, members of the media, ladies and gentlemen, good morning. Good morning. Welcome to the 7th Annual General Meeting of SYGNUS Credit Investments Limited. My name is David Cummings, and I'm a Vice President here at the SYGNUS Group. And it is an honor to stand before you today as your Master of Ceremonies, as we gather to reflect on the achievements of the past year and to set our sights on an even brighter future. SYGNUS Credit Investments, or SCI for short, has continued to thrive in a competitive and ever-changing market, thanks to the dedication, innovation, and collaboration of everyone in this room and many others. Our continued success as a leader in private credit is a testament to the strength of our vision, the trust of our investors, and the commitment of our teams. Today's meeting is an opportunity not only to celebrate what we have accomplished, but also to engage in meaningful discussions about how we will sustain and amplify our success in the years to come. From financial performance to future strategies, there is much to cover, and I'm confident it will be an insightful and inspiring session. Thank you for being here, and thank you for your continued trust and support in your company, SYGNUS Credit Investments. Let's make this an impactful and memorable meeting. And so, let's get started with the call to order by the Chairman of SYGNUS Credit Investments, Mr. Linval Freeman. Thank you.
Good morning, ladies and gentlemen. Those present here and those who are online. Give thanks for a new day, and this is a day that the Lord has provided. My name is Linval Freeman, and I have the privilege of serving as the Chairman of the Board of SYGNUS Credit Investments Limited. It is my pleasure to welcome you all to this 7th Annual General Meeting of the shareholders of SCL. I'm advised by the Company Secretary that in accordance with the Company's Articles of Association, a quorum is present by proxy and in person. The meeting is therefore properly constituted, and I now declare the AGM open. So welcome. Apologies. I'm advised by the Corporate Secretary that there are 2 apologies for absence. Mr. Beres Gray, CEO of SYGNUS Capital Limited, and Mr. Gregory Samuels, Senior Vice President and Head of Investment Banking, SYGNUS Capital Limited, are both attending and participating in a conference. And I often ask myself, and sometimes I ask management, what time do they sleep at night? Because these guys always seem to be out looking for opportunity for you, the shareholders. And so Beres and Gregory are overseas pursuing opportunities as well as promoting SCI and what we do. I would like to acknowledge all the members who have joined us today, whether in person or online. Your presence signifies your dedication to our company, and we value your interest and support. Each year, we look forward to this opportunity to meet with you and to share SCI's achievement over the past year. Similar to the approach taken last year, the directors have agreed to host a hybrid meeting to ensure board participation from our shareholders, to ensure broad participation from our shareholders, offering the flexibility to attend either in person or virtually. The meeting is convened in St. Lucia, and we have a satellite location in Kingston, Jamaica, where we are currently located. Shareholders will be able to view the proceedings of the AGM, vote on resolutions, and submit their comments and questions by logging on to the e-platform used to facilitate the AGM. The instruction to access this e-platform was provided by the shareholder advisory notice released on the Jamaica Stock Exchange website and on the various social media platforms. For our members joining us online, the registration link for accessing the AGM was circulated. Registration will remain open throughout the duration of the meeting, allowing individuals to register and admitted at any time. The notice of meeting and the proxy form were dispatched to all shareholders on record in accordance with the company's Articles of Association. If there is no objection, I propose that the notice of the meeting be taken as read. Before commencing today's proceedings, I will give a very brief overview of the company. Most of you already know what the company does, but for those new shareholders, I'd just like to go over a few things. So SCI is an international business company incorporated under the International Business Companies Act, IBC, of St. Lucia, with its registered office at 20 McCord Street, Castries, St. Lucia. SCI is a specialty private credit investment company dedicated to providing non-traditional financing to medium-sized firms across the wider Caribbean region. Non-traditional forms of credit are more customized and flexible than traditional financing. Consequently, the company offers an alternative channel through which medium-sized firms, which are typically underserved by traditional forms of financing, can access capital to drive their expansion and growth. The company targets mostly portfolio companies operating across a broad range of sectors, including manufacturing, distribution, financial services, energy, real estate, transportation, infrastructure, and business services. These portfolio companies typically have revenues between US $5 million and US $25 million. By virtue of the shares being listed on the main market of the Jamaica Stock Exchange, the company is subject to all laws applicable to issuers of securities in Jamaica and company listed on the Jamaica Stock Exchange. I would like to introduce to you our directors of the company joining us this morning, and sitting on the platform we have a few of them. So to my immediate left, Dr. Ike Johnson. Then you have Mr. Aris Masada next to him, then Mr. Ian Williams, and then Mr. Damien Chin, who's also sitting there. Our other directors, Hope Fisher and Peter Thompson, have joined us virtually and so are online. I'd also like to mention Mr. Rory McManara, who is our company secretary and who is sitting in our St. Lucia office. I'd also like to recognize Ms. Valerie Rapier, a representative from our secretary, also sitting in the St. Lucia office and who is serving as our recording secretary today. The directors who are joining us virtually are able to fully participate in the meeting and to answer any questions that may be also posed to them. Also in attendance are members of the Investment Management Executive and Senior Management Team. Sitting on the podium with us is Jason Morris, Chief Investment Officer of SYGNUS Capital Limited. Jason, welcome. Other executives include Cyrilyn Hudson, Chief Legal and Compliance Officer, and you see Cyrilyn walking around, making sure that things are in order. We also have David Cummins, who is the Vice President and Head of Real Estate, who started the meeting as the Chair. We also have Elizabeth James, who is Head of Wealth, and Monique Anthony. I'm not seeing Monique, but Monique is also should be in attendance. And she is the Chief Financial Officer. We have Yashi Hall, Vice President and Head of Risk, Mr. Gregory Hines, VP Asset Investment and Project. Mr. Ryan Landley, he's AVP Investment Management, and Andrew Foreman, AVP Legal Counsel. Several other team members, I should say, are also present at the meeting, and so this list is not exhaustive. I would also like to acknowledge the presence, and maybe just show your hands as I call your name. Damien Reed, partner of KPMG, if you're here. Not here yet? Okay. Hude? Is that you, Hude? Okay, welcome. He's also a partner from KPMG, and I also have listed Danielle from KPMG. Okay, who is one of your audit managers. I'm also informed that representatives from our registrar and transfer agent, Jamaica Central Securities Depository, are also present with us. And I have listed here Miss Adika Green, as well as Miss T. Hall. I'd like also to welcome members of the press and also non-shareholders who may be present with us, both in person and also online. Throughout the meeting, I will refer to SYGNUS Credit Investment as the company or SCI interchangeably. You have been provided with a copy of the agenda, which sets forth today's proceedings. So you maybe just look at the agenda and see what business we are conducting today, if you haven't done so before. Minutes of the meeting. The directors have confirmed that the minutes of the last AGM held on the 17th of January 2024 are true and correct recording of that meeting. Copies of the minutes of the meeting are available for viewing on the company's website. The purpose of the meeting. The purpose of the AGM, and I'm just reiterating this because I know everybody present and who are online already know this, is to receive and consider the annual financial report of the company for the financial year ended June 30, 2024, together with the auditor's report. This AGM is also to consider, and if thought fit, pass the respective resolution duly set out in the notice of the AGM, dated 28th of October 2024, and duly signed by the company secretary. The issue of proxies. The company secretary has advised that proxies have been lodged by 47 shareholders, holding approximately 240 million ordinary shares and representing approximately 41% of the ordinary issued capital of the company. Of the total proxies lodged, 21 shareholders holding approximately 61 million shares and representing 10% of the ordinary issued share capital of the company have appointed the chairman, meaning me, as the proxy holder. For the remaining proxies, the proxy holder must attend the meeting in person or virtually to represent the member. Those proxies will be deemed valid once the registrar has confirmed the attendance of the appointed proxy holder. Meeting procedures. Before we proceed with the formal business of the AGM, there are a few procedural matters that I'd like to bring to your attention. And the first one is voting. Before we move to adopt the resolution, I'd like to outline the procedures for voting. Casting a vote in person for persons attending in person. Shareholders' physical attendance will vote by show of hands. Once we get to the business section of the meeting and the voting on the resolutions is taking place, I will read each resolution and thereafter table that resolution for adoption. Shareholders will be asked to vote for the resolution via a show of hands. Shareholders who are for the resolution will raise their hands, followed by shareholders who are against the resolution. The scrutineer present will take account of the numbers of hands raised and for and against the resolution, and this total will be added to the shareholders who voted virtually or by way of proxy. If a voter abstains, their vote will not be included in the count. Each shareholder or proxy present would have received either a red or a yellow wristband. When raising your hand to signify your vote, please ensure you show the wristband to ensure that your vote is properly counted. Those attending virtually. Shareholders attending virtually will vote using the e-platform that I referred to earlier. During each resolution, you should wait for the option to appear on the screen or click Vote Now on your screen. Once the resolution is on screen, select the For or Against option. Then select Submit Vote at the bottom of the screen. You will be asked to confirm your vote. Select Yes to confirm your vote or No if you want to change your vote. Proxies. The company secretary had advised that a number of valid proxies have been received, as indicated before, in relation to these resolutions. In relation to the proxies, where the chairman has been appointed to vote, I will vote all proxies in accordance to the directions provided. Where undirected, where proxies have been given without direction, I will vote the undirected proxies in favor of the resolution. For the remaining proxies, the proxy holder must attend the meeting in person or virtually to represent the member. Those proxies will be deemed valid once the registrar has confirmed the attendance of the proxy holder. Proxy holders are also permitted to cast their votes online in cases where the shareholder has not indicated their vote on the proxy form. Upon confirmation, the proxy holder identified by the registrar will be granted permission to participate online. Mr. Andrew Foreman, Andrew, can you raise your hand? Yes, Andrew will act as scrutineer and will confirm the vote by the show of hands, as well as the total votes for each resolution. Hereafter, voting will close and I will announce the results thereafter. Question and answer. We will have 2 question and answer segments. The first segment will be prior to the adoption of resolution number 1, which is the adoption of the audited financial statements. The investment manager will make a presentation, and I think Jason is carded for that, on the company's performance and the outlook of the company. At the end of the presentation, we'll have the first question and answer segment, where shareholders may ask questions. We have allotted approximately 15 minutes in this segment to address your questions. Following the votes on the remaining resolution, there will be a second question and answer segment where shareholders can ask questions related to the company's business. We have allotted another 15 minutes for this segment. Mr. David Cummins, who started the meeting, will moderate the Q&A segments. For the shareholders attending in person, if you wish to ask questions, you should indicate by show of your hands, as said before, and our host will provide you with a microphone where you will state your name and your status as a shareholder for the minutes. For the shareholders attending virtually, if you wish to ask questions, you should 1. Select the Q&A option that is located on the screen. Enter your question into the text box provided. Select the send button located to the right of the text box to pose a question. The question will be read aloud by one of our hosts so the other shareholders can hear the question. Shareholders are asked to limit their questions to 2. You have some shareholders who might have a number of questions. Hopefully, the questions that are not answered are covered by other shareholders. To give others an opportunity to pose questions and to ensure the AGM's agenda can be completed on time. Questions and comments from the floor should pertain to the specific matter under consideration. Right? So we don't want any questions to something else and another matter that is not on the floor at the point in time. With this background, we will move straight into the formal business of the AGM as set forth in the agenda. In order to conduct an orderly meeting, we give all shareholders an equal opportunity to participate, and so we will follow the agenda as outlined. I will now present the formal business of the meeting. We will take the remaining resolutions in the order as outlined in the notice to the meeting. Audited financial statements. In accordance with Article 190 of the Company's amended and restated Articles of Association, the Company is obliged to lay before the meeting the audited financial statements, together with the reports of the directors and auditors, which are contained in the Company's annual report for the year ended 30 June 2024. The audited accounts were circulated and are before the meeting for discussion. Before inviting the discussions, however, and the reports, I will invite our audit representative to the podium, and also our investment manager to make presentation on the auditor's report and the company's performance, respectively. Our external auditor, KPMG, have given their opinion, a clean opinion, that the audited financial statements, and when I say clean opinion, there are no qualified issues, no matters, no outstanding matters, present a true and fair view of the financial position of the company as at the 30th of June 2024. And so, can I invite now the partner from KPMG, who will be presenting the report of the auditors. Can I invite you to the podium to present the report? Thank you. Is it you, Damien?
This is
Okay.
Damien.
All right.
Morning, everyone. Many of us in the room this morning. So my name is Damien Reed, auditor from KPMG. So as you're aware, because this company is incorporated in St. Lucia, unlike the Jamaica Companies Act, there's not a requirement for the auditor to read the auditor's report. However, the auditor's report is important to the shareholders of the company, and as such, I will read specific parts that are of import. Starting from page 47. Independent Auditor's Report to the members of SYGNUS Credit Investments Limited. Opinion. We have audited the financial statements of SYGNUS Credit Investments Limited, the company, comprising the separate financial statements of the company and consolidated financial statements of the company and its subsidiary, collectively the group, as set out on pages 55 to 126, which comprises the company's and the group's statements of financial position as at June 30, 2024, the group's and company's statement of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising material accounting policies and other explanatory information. In our opinion, the accompanying consolidated and separate financial statements presented fairly in all material respects the financial position of the group and company as at June 30, 2024, and the group's and company's financial performance and group's and company's cash flows for the year then ended in accordance with IFRS accounting standards as issued by International Accounting Standards Board, IFRS accounting standards. I'll now turn to page 48. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and separate financial statements of the current period. These matters were addressed in the context of our audit of the consolidated and separate financial statements as a whole and informing our opinion thereon. We do not provide a separate opinion on these matters. Valuation of investments. The valuation of the groups and companies' investments measured at fair value through profit or loss amounting to US $57,439,576, 2023, US 47 million for the group, and US $27,148,453, 23, US $22,628,408 for the company includes significant assumptions and judgments about the performance of the counterparties over the tenure of the investments. The most significant are those related to expected cash flows and market comparable price, book value multiples. Furthermore, the valuation methodologies rely on unobservable inputs such as profitability, achievement rates, risk-adjusted discounted rates, and controlled premium, which have a significant impact on the resulting values of investments. These judgments and assumptions could result in estimated fair value that are materially different from actual transaction values. You can refer to notes for D10, 26D of the financial statements. Our procedures in this area in the main included the following to address the key audit matter. We tested the design and implementation of the group investment managers review and approval controls over determination and computation of fair values. We involve our own valuation specialists to assist us in assessing the reasonableness of the valuation methodologies employed and the fair value conclusion. We considered the requirements of the financial reporting framework and tested source data and underlying assumptions utilized to value the investments and evaluate the impact of any variations. We also assess the adequacy and clarity of the disclosures, including the degree of estimation uncertainty involved in determination of fair values in line with the requirements of the financial reporting framework. Measurement of expected credit losses on financial assets. The financial reporting framework requires the group and company to recognize expected credit losses, ECL, on financial assets, and determination of ECL is highly subjective and requires application of significant judgments and assumptions. The key areas requiring greater management judgment includes determination of significant increase in credit risk, SICR, the probability of default, the collateral value, loss given default, exposure at default, and the application of forward-looking information. The identification of a significant increase in credit risk is a key area of judgment, as the criteria determine whether a 12-month or lifetime loss allowance is recorded. The incorporation of forward-looking information reflects a range of possible future economic conditions. Significant management judgment is used in determining the economic scenarios. Management considered the following: the qualitative factors that result in change in ICR, increased uncertainty about potential future economic scenario, and their impact on credit losses. The use of these judgments and assumptions increases the risk of material misstatements and is therefore a key audit matter. And you can see more details in notes 4C, 5, and 27B of the financial statements. Our audit procedures in this area in the main included the following. Obtain an understanding of the model used by the group and the company for the calculation of expected credit losses through evaluating the related model, documentation, inquiries, and walkthroughs. This further included consideration of the governance over the determination and approval of key assumption, judgments, and assumptions. Tested the design and implementation of key controls performed by the group over the computation and approval of the expected credit losses. We tested on a sample basis the completeness and the accuracy of the data used in the model by tracing selected significant data back to relevant source documents and to the underlying accounting transactions. Involve our financial risk modeling specialists to assist us in evaluating the appropriateness of the group's impairment methodologies, including ISCR criteria used, and in independently assess the assumptions and probability of default, loss given default, exposure at default, and incorporation of forward-looking information. We also assessed the adequacy and clarity of the disclosures and the key assumptions and judgments considered the requirements of the financial reporting standards. And finally, the audit partner on the audit resulting in this independent auditor's report is Damian Reed, KPMG, Chartered Accountant, Castries St. Lucia, September 26, 2024. Thank you. Chair.
Damian, I thank you. But I'd just like to interpret and just summarize what Damian just said, right? Basically what he said, he has examined our books and all the numbers that were presented to him, he has no problems with them, and the numbers that are presented in the financial statements are fair and accurate. That's basically what he was saying all along. Right, Damian? Okay. All right, now for the fun part. With Jason coming up to make a presentation. And, you know, I'm always happy when Jason comes up because as a director and a shareholder myself, I feel very happy when I hear the good news, you know. Because he always comes and tells us about things that are, every year we have record performance. And I don't think this year is any exception to what we heard last year. Each year it gets bigger and bigger and better and better. Jason? Yeah. All right. So it's your time to present.
All protocols observed. Good morning to everyone in the room, online, wherever in the world you are. It's 2025 and I'm happy to be alive. And I really mean that. And I hope you are as well. Okay, so just want to provide a few comments on the performance of SCI during the financial year and give some update as to what would have happened to the performance of the company subsequent to the end of the financial year, which is actually publicly available information. And then finally, give some insights on the strategy and future plans of the firm. So I will start out with a dashboard. First thing, there are 6 things I want to go through. I'll spend a little bit of time here because it will create a lot of context, you know, for what's to come. First and foremost, we'd like to really thank all of you shareholders and all of you who are thinking of becoming shareholders like myself. Well, I'm a shareholder already, so you know, like to thank you in advance, right? Because without shareholders who really believe deeply and truly in the vision and strategy of SCI, you know, we wouldn't be here. So I really, really want to thank you. So you can give yourselves a nice round of applause to start. And you'll be clapping a lot, so that's just a warm-up, right? So the first thing I want to highlight is the fact that the just concluded financial year represented a record performance for SCI, where for the first time in our history would have exceeded $6 million in net profit. All right. And this is not just about the figure of $6 million. It's really about what I'm going to term earnings power. And as you'll see throughout the rest of the presentation, what I mean by earnings power is basically all the engines are working in the firm. All these tools and chair, they are very solid. And what we intend to do is build upon that very solid foundation as we go forward. And we'll discuss this some more. Second item I want to highlight, which was part of the reason for the first, is a Puerto Rico investment that we did in 2022 by purchasing SYGNUS Financial Corporation, as the name was then, and the name has changed to SYGNUS Financial LLC. But as you will see throughout the rest of the presentation, this company has been transformed thanks to the tremendous leadership and management from the team in Puerto Rico, led by James Connor and ably assisted by our very good doctor on the panel, Dr. Ike Johnson. That company has transformed itself. We have gone through first year of reorganizing that company, and as you'll see, the earnings power of that company increased by almost 6 times, 5.7 times increase in net profit. And this is not, yes, David, that's it. This is not just a one-off incident. It is a transformation of the firm and setting up that company for a tremendous future performance. Third thing I would like to say is that since SCI started, SCI has deployed an incredible $529.6 million to companies across the Caribbean region as an entire platform, including the acquisition in Puerto Rico and what they have done since the acquisition date, February 28, 2022. So, go again. Of that amount, right, during the financial year, which is why we are here, SCI would have deployed a record $65 million US in the financial year. That's the highest we have ever done. Puerto Rico would have deployed $87 million US, the highest it has ever done. And for SCI, would have deployed the highest amount of money to a single investment company, which was actually a Jamaican firm of $22 million US. So those are all very substantial achievements. So once again, so during the course of the financial year, between SCI proper and the Puerto Rico businesses that SCI owns majority shareholders in, 95.6%, we would have done $152.2 million US in one single year, deploying capital to companies across the Caribbean region to foster growth, and innovation. So, just warming up, right? Fourth thing, and I want to refer to this as, you could call it JC, or you could call it JC Public Market Private Credit Partnership, right? Because since SCI started, cumulatively, we have raised $130.7 million from the public markets using the Jamaica Stock Exchange to raise capital. And last year when we were standing here, we would have said that we would have raised a record $50 million US from a public offer. And this year again, just concluded, just listed, I think yesterday, we would have raised $33 million US dollars in the largest perpetual preference share in the history of the Jamaica Stock Exchange. So we really thank shareholders. I mean, when SCI started, it was tremendous support from institutional investors primarily, such as pension funds, who continue an amazing job of supporting SCI. But now we have taken the message to everybody on the street, so to speak, because we want everybody to eat our food, so to speak, and participate in good cooking. And that's what we do at SYGNUS. Fifth thing that I want to highlight is that last year we were challenged around increasing distribution to shareholders, increase the dividend too small. Even though SCI is one of the highest dividend paying firm on the Jamaica Stock Exchange. So I'm happy to report that we listened, so to speak, and we complied. So during the financial year, we would have done $3.2 million US, which is a new record in terms of shareholder distributions. And just to top of the icing on the cake, we have to remember that SCI went through COVID, just like everybody else, but we have never, ever, ever, ever missed a dividend payment that we don't intend to. So, lastly, but by no means least, we can talk all we want about originating transactions and deploying capital, etc. The proof of the pudding is always in the consuming, right? So the question is, of all the capital that we have deployed, how much of it have we lost? How much shareholder capital have we lost from inception? And SCI, we have lost on an annualized basis, which means if you take the 7.5 years since we have been operating and deploying capital, and take how much total amount of money that we have lost and divide it by the number of years, you get the annualized loss rate, for simplicity. And that loss rate is a grand 0.23%. So in other words, we have only lost on average per year 0.23% of the capital that we are investing. That's a good thing, by the way, for those who don't know. It's very, very tiny. And if you compare that to anybody who knows anything about credit, that is incredibly a small number. So if we take the platform itself, which include the Puerto Rico operation, and take all the capital that has been deployed, that 530 million, take all the capital that has been deployed and say, well, how much money have you crystallized in losses? It's a grand 0.16%. So clap again for that. All right, that's the end of my cheerleading for clapping. You will have to clap on your own going forward. All right, so I'm going to go through this slide very quickly. So this slide is just showing the general summary of the performance of the firm during the financial year. As you can see, there was a record net profit up 17.3% to 6.03 million. Total investment income, which is our core revenue, a record 10.1 million, up 13.6%. Net investment income, 5.28 million, also up 3.9%. Earnings per share, up 18.4% to a record 0.0103 US dollars. And dividends paid, I said it before, 3.15 million to be exact, up 23.6% over last year. Now, what was it that drove this performance? Well, one main thing, other than having a much bigger balance sheet from raising the 50 million US last year, this time, was that Accrescent Financial LLC, formerly Accrescent Financial Corporation, has been transformed due to some changes that we would have made to the firm, which were effected on July 1, 2023. So June 30, 2024 makes 1 year to the day that the company would have been transformed. And as you'll see on another couple of slides, the firm would have generated a record 4.18 million US dollars, which is real money. It's not, not paper money. However, despite generating that amount of capital, that amount of profit, sorry, in SCI's financial statement, because this firm is actually not consolidated, we have to use some fancy models to determine what's the expected value that SCI would get from the investment, which, proof of the pudding is always in the consuming when it comes to how much capital you can get returned when that company starts to pay SCI dividends, which will be sometime soon. Only 1.3 million of that amount was actually reflected in SCI's audited financial statements. In other words, the company made a lot of money, and only a small portion of it was reflected in SCI's financial statements. Which means, as we go through time, you should expect that more and more of that money is going to start reflected in SCI's financial statements, and so you should see the benefit of that. And when I get to the Q1 results, you'll see what I mean. And due to this restructuring of the Puerto Rico company, would have also had a tax credit of 632.6 thousand, which is a very good benefit to have. And just a note on this tax credit is that this tax credit is part of an overall tax credit that the company will have access to based on US tax laws, based on Puerto Rico's tax laws, over the next 13 years. And this 632,000 represents a small fraction of that. So if AccuSent continues to do well, we will continue to see more and more tax credit, which is good for shareholders. Why? Because it means more tax dollars, well, more dollars in the pockets of shareholders. So, moving on to the next slide, I'm going to be very brief here. This slide just shows you the cumulative amount of dividends that SCI has paid since inception. And yes, we did not miss any dividend payment during COVID, despite at that time being a company that was about 3 years old, which is a very rocky road for any company that is just 3 years old. It's a 100-year event, sudden stop, economy shutdown, etc. We all know what that was, right? So in grand total, 15 million US, 15.1 million US, that's about 2.25 billion Jamaican dollars, for those of you who are checking. That's a lot of dividends to give back to shareholders. So, for those of you who are not yet shareholders, I encourage you to try and get some of the billions that SCI is giving back to shareholders. Yeah, love it. A few comments on AccuSent. I'll spend about 2 minutes here because I want everybody to understand. Sometimes you read a report, you read the financials, or you might go to your stockbroker and the analysts do a report and give you the report because they are experts, but I want you to understand it directly from the horse's mouth, so to speak. Okay, so AccuSent Financial, in terms of, I'm just giving you some highlights. A lot of information on the page, but don't worry. We're going to start from the ground up. So starting from the bottom of the page, where you see AccuSent Financial LLC, that company was acquired in 2022. We now own 95.6% of that company. So you can see that for the financial year ended June 2024, the company will have earned 4.18 million in net profit, right? That's how much net profit the company earned. And you can see that in the previous financial year, before the restructuring, it only earned 733.8 thousand. So that's where the 5.7 times multiplier came from in terms of the difference between how much the company was earning at a steady state and how much it earned in that year. And by the way, it had never earned more than, say, $1 million before in the history of the company. And the company is 21 years old. So that company, when you look at the consolidated financials, that company would have generated a net profit of 3.69 million. And then, above that company, you have another company that owns those shares. So I'm trying to not get into the weeds too much, right? Just trying to focus. So, from 4.18 million, you consolidate up, you get to 3.69 million. And that's where the consolidation stops. That 3.69 million, we have to do a fair value of that. So that company, even though it made 3.69 million, we can't take the 3.69 million and take 95.58% of it and put it on SCI's balance sheet. We have to do a valuation of it, right? And that valuation includes looking at companies that are publicly listed globally and taking some market multiple ratios and applying those multiples. And when we did all of that, which has been approved by the auditors, by the way, we only get $1.3 million flowing through the income statement of SCI. And this is very important for you to hold on to that information because it will come up again. So that 1.3 million compares to 372 million that flowed through SCI's income statement the previous year. So the key takeaway here is we have an investment in Puerto Rico. That company made 4.8 million. When you look at what's on SCI's income statement, only 1.3 million is what the fair value of it is, according to how we have to do the valuation models, right? So the key thing is the company in Puerto Rico is making a lot of money. All right. Now, in terms of what's driving how this company is making money, why is the company making a lot of money? There are two main things, right? The first thing is that we restructured the way how the company operates. So before, the company existed with all the employees operating the company and generating profit and revenues and so forth. And we went in, I should say Dr. Ike Johnson, the culinary specialist, the genius at cooking. Well, that's a bad word. The innovator. Yes. Basically went in and said, well, the way that we want to do this is to treat it just like how we have SCI operating, which is we have a balance sheet that all that's on the balance sheet are just investments in private credit instruments, and we have a manager who is managing the company, and that manager is paid a particular fee, 1.5% management fee. You operate the company and you need to make money for shareholders. And by doing that level of restructuring, two things would have happened. One, again, working from the bottom of the page up, the operating expenses of the company would have been permanently reduced. So before, management expenses from being an internal managed company in the previous financial year, it was 3.48 million. After this restructuring exercise and remodeling the company to look exactly like how SCI, as you know, it is operating, the cost in 2024 for the full year was 1.2 million. So effectively, we would have cut out $2.28 million in costs or expenses for the firm. And that goes... So that money goes directly to what you call the bottom line. And that filters straight to, that's real cash. That's cash that you don't have to pay out, right? So it's a big change in the operating cost structure of the firm. Big, massive. Going further up the page, the next thing, what you could say, one of the negatives from doing the restructuring is that the company used to earn some small fees that they no longer earn because of the restructuring. And they would have earned 688.8 thousand in the previous year, which is an average, that's what they would have been doing. But now this fee has gone to nil, right? So if you take the net benefit and strip out 2.28 million in costs, but you give up 600,000 fees, you still come out way ahead of the game. So that's the external fund management change. Massive benefit to shareholders. The second part of it is changing from a corporation to a limited liability company. And based on Puerto Rico's tax laws, this meant that the company has a completely different tax structure. To the effect where you, for the financial year, would have saved ourselves about $1 million in taxes. So net, $2.76 million was the net impact from those changes. And as I said before, these are permanent changes. So going forward, we will always have a lower cost structure for the Puerto Rico business than we would have historically, and we always have a more optimized tax base. So this is what we mean when we say the earnings power of the Puerto Rican business is increasing. So now I'll go a lot faster through the rest of the presentation. This slide is just showing you how good or bad management is doing in terms of the expenses. So for every dollar of revenue that is generated, how much of it goes out in expenses. And we set a threshold of 40%, no more than 40%, which is international benchmark. You can see that for the financial year, we were at 47.7%, so we need to get back in there. A couple of things would have affected that, one being the large pool of capital that we raised, which we weren't expecting to raise, which we raised, and we have to pay broker fees for those. So that's a kind of well, I don't want to say one-off because we are constantly raising capital, right? But as we deploy out that capital, the revenue base of the firm is going to be much higher, and therefore this fee will come down. In fact, during the first quarter, it fell all the way down to 24%. And the second part of the slide is showing a management expense ratio, which is taking operating expenses and dividing it by the total assets of the firm. And we are saying that that should not be greater than 2.85%. It was well below the threshold at 2.4, and that is very, very important because it means for every dollar of asset that we have on the balance sheet, only 2.4% of it in terms of expenses is going on, which means the rest of it remains to give you back dividends and to reinvest and grow the firm. Balance sheet summary: the firm has $72 million in equity, and of that amount, $60 million was its shareholders' capital. So we have basically $12 million in retained earnings, and with the recent $33 million capital raise for the preference share, it means that you're looking at a $100 million company in terms of capital base. So I think, in short order, SCI could say has equity capital of about $100 million, which would be the first. Nobody now clap. And the total asset of the firm, almost $200 million at 198.5, a new record. In terms of balance sheet KPIs, all of the metrics, we are within the threshold limits in terms of debt to assets, asset coverage ratio, debt to equity, and non-performing investment ratio. So now I will give you a quick overview as to what has happened since in terms of the Q1 financial results. More of the same. It's record on every level. Record net profit $4.92 million, up 561%. I told you to hold on to a previous slide on Puerto Rico, where I said that the firm made $4.8 million and only $1.3 million flow through to SCI's income statement, right? So in this instance, for the first quarter, Port Accrescent actually made about $1.58 million US dollars in one quarter, which means that if you clap, follow him and clap, man. Because 1.58 times 4, if you were to just say, you wanted to do some forward looking, would give you a figure that is greater than $4.2 million in the previous financial year, right? So it's making more money than year over year than it did last year. So, because of that, the same math that I showed you on those two slides is what resulted in the net profit of SCI jumping so massively during the first quarter. Because now, the amount that flowed through to SCI's income statement was $2.67 million for just one quarter alone, versus the 1.3 that you saw for the entire financial year last year. And that's because the company continues to grow. Not sure what else to say here. Well, one thing I want to say is that, so if you take the 5 quarters since the reorganization, restructuring of Accrescent has actually occurred, the company has generated $5.17 million in net profit. So in 5 quarters, it has generated $5.17 million. But the amount of value that has shown up on SCI's income statement is only $3.97 million. So again, we're not being overly aggressive with stating what's the value of this Puerto Rico investment, right? Because it generates way more money than what is showing coming through on our income statement. I want you to really focus on that, because as we go through quarter to quarter to quarter, this number will move up and down a little bit, but you can see that as the company continues to do what we would have done the acquisition to do, which we are pretty confident of, then this is going to be a major driver for SCI's financial, because it's in a $100 billion economy, which means that it can do many multiples of capital deployment versus what SCI can do in all of the English-speaking Caribbean territories. So just laying the groundwork for those of you who are not yet shareholders and you're thinking of becoming a shareholder. That's what you would be buying into. Now, quick summary here. I'm not going through this slide. I just want to highlight where the first red circle, 2.672 million, that's just showing you how on SCI's income statement the money from the Puerto Rico business is filtering through. So in terms of activity for the quarter, investment portfolio would have increased to 192.7 million, up from 152.7 million last year. The number of portfolio companies would have been 37 versus 40. New investment commitment 6.32 million versus 7.83. So investment deployment would have slowed down, but subsequent to the end of the September quarter, they would have speeded up. So you normally have little fluctuations in how we deploy capital. Yield on the portfolio was 15.3% versus 14.6%. We were in a very high interest rate environment. We are now moving into a lower interest rate environment, so we expect this to come down over time. Average tenor 1.4 years versus 1.7, and dry powder, not a lot of money left, 2.38, which is why we did the capital raise. Important point on this slide is that we would have gotten approval for a 10 million facility from World Business Capital, which is guaranteed by the United States Development Finance Corporation, which is an arm of the US government, which means SCI's first, call it, committed to get transaction that the DFC is doing in Jamaica as constituted as the DFC. So that is actually a big thing for SCI. This is Acrescent's portfolio summary. I'm not going to go through that, other than to highlight the fact that, as we said before, during the financial year, the company deployed a record 87 million, and during the first quarter, they deployed 17.3 million. So the rate at which they are deploying capital is pretty rapid. Expected credit loss, you can see, very steady, still below 1%, which is exceptional for a private credit company of the size of SCI. And final slide, because I'm getting the wrap-up signal from our astute compliance and attorney around there in our 4 things I want to leave you with. First thing is that Acrescent Financial Corporation is real, is here to stay, is going to drive SCI's growth. How do we know this? Well, it has an exceptional management team of about 30 or so persons with a tremendous track record in excess of 2 decades. And with the assistance of Dr. Ike Johnson and the rest of the SYGNUS team, we are driving the scaling of this business. And we are seeing that happening in real time. They increased their revenue and their net profit almost 6-fold in the last financial year. At the start of the current financial year, in the first quarter, net profit is up 4 times already. And we expect that this will continue as we go through the quarters. They also have increased the amount of dry powder that they have access to. The dry powder that they have access to almost doubled. And so by having more dry powder, and by the way, dry powder means capital to deploy into new investments, if you are new to alternative investments. So by having more capital to deploy, it means that they can have a faster rate of growth. And so we expect that growth to continue, especially given rates have started to come down. Their cost of financing, which is variable rate, will actually come down, and this will benefit them. So Acrescent is going to be a major driver of SCI, which is why we not only did the acquisition, but we increased our stake in the company 3 times since the acquisition. Second thing is just our strategic growth path. So we said we wanted to participate in about a $1 billion worth of private credit transaction. We are halfway there already, because we have, we've gone 500 million since we started operations in terms of involvement in private credit transactions. So only a little bit less than 500 million to go, right? Core revenues to get at over 12.5 million. That's a work in progress. As you can see, by the fact that the base earnings are firm, is rising. Return on equity, we need that to be in double digits because we want to pay out a lot more dividends and we want to grow a lot faster and we want the share price to grow much, much higher. And I'm going to have a point on the share price in a minute. So that's in progress. Earnings per share, we are targeting 20% annual growth. For the financial year just concluded, we ended at 18.4%, which is, almost there, almost get the A, get a B+, but we're pushing there. For the first quarter, we exceeded it by some distance, way over the 20% based on the net profit for Q1. So we hope to keep that trajectory. 5% dividend yield in steady state based on the APO share price, which is the last time we did an equity offering. So, based on my math, we are now at 5.2% on the APO price, and you guys can check it yourself and tell me if I'm wrong. But I also want to highlight the fact that the regular yield, based on last Friday's closing price of SCI, US dollar shares, is actually 7.7%. And I need to spend, Sir Lynn, if you give me 1 minute, because I need to spend some time on this, because I've seen a lot of reports and I see a lot of social media people doing their analysis and calculating dividend yields, and I want you as shareholders or prospective shareholders to do the calculation for yourself, right? So, SCI has paid out $1,307,610 in US dollar dividends, meaning those who hold the US dollar share class, that's the amount of dividend that you got to divide up among yourself. So the way how you know how much that yield is well, how many shares exist in the US dollar share class. And the number of shares is 242,599,235, give or take. Which, if you take the two numbers and divide them, you get 0.00539. So that's the dividend per share if you are holding and you go and buy the US dollar share class. So, if you take that math and divide the dividend per share by the stock price, which was 7 US cents, you're going to get 7.7%. I don't hear no sound. 7.7 SCI US dollar shares on the public market is trading at 7.7%. So if you go to and see that at 7 US cents, it's 7.7%. The yield be cash in your hand, because that's the dividend that we are paying, right, per year. If you take the J dollar share class, so J dollar share class, we paid $193,057 Jamaican dollars in dividends. How many Jamaican dollar shares exist? Well, 337,964,858. You do the same math again, and you're going to get 6.7%. And this does not take into consideration the depreciation that happened between the date of the first dividend and the second dividend, right? So, all I'm saying is, those dividend yields are much higher than what I see people computing saying is 3% and 4%. I'm not sure what math they're using, but I want you to understand how you should compute the dividend yourself. So you look at the stock price, just go and look in the audited financials and check how much dividend actually paid, and take the number of shares for the US dollar share class or number of shares for the J dollar share class, divide it 2, and that's how you get the yield. So 7.7% for the public traded stock is very close to the 8% dividend that is being paid by the perpetual preference share that we just issued. So if people bought and oversubscribed so much for the perpetual preference share, why is the publicly traded US dollar shares and J dollar shares trading at those prices? It means that people don't understand what the value is. I just gave you the value. Okay, we are continuing to try and raise 100 million USD, and this is a revolving wheel. Every year we come, we're going to still trying to raise 100 million. So it's not, we try to raise 100 million and then we stop constantly, right? So we continue with negotiation and discussion with other partners to get additional capital. Third point is new business. The one I'll focus on here is really, so we invested 1.5 million US in another Puerto Rico venture, which is a a business impact fund in Puerto Rico. So the company actually takes the name of SYGNUS Credit Investments Business Impact Fund. SYGNUS Credit Investments was the sponsor. So as this investment germinates, we will bring additional information to you on it. Second thing here, though, under new business is that we are in the process of working with a strategic partner to build out a dedicated financing solution business, which once that gets up and running, will provide additional information to you. So what I'm trying to say is that think of SCI as just like any other normal company. We do private credit investments, but we can and will do investments in other private credit verticals that will generate additional profits and dividends that benefit you and us as shareholders. Bear that in mind. Finally, share buyback program. The share buyback program continues. We will buy back shares once we are out of blackout period and not under restrictions when we think that the shares are exceedingly cheap. And we will continue to do this on an ongoing basis. I have nothing further to add other than the fact that since inception, we have bought back 10.4 million units, which is approximately 1.8% of the float, which last time I checked, I think, and I can be corrected if I'm wrong, maybe the largest percentage float buyback, or one of the largest percentage float buyback on the Jamaica Stock Exchange. Thank you very much.
Thank you, Jason. I don't know if I can summarize what you just said, but I'll try. So last year we had a profit of over 6 million, 6.03 million. For the first quarter this year, our profit is over 4 million. So we are going for another record profit this year. And a record profit means record dividends. Isn't that what it means? And he actually says that the shares are trading at a very low price. This is a good time to buy in a very profitable company. So I think that's one of the messages that he is actually trying to send to our shareholders, that your investment is pretty safe and it's a good company to still increase your investments if you so desire. All right, we're going to take some questions in this segment. David, you will moderate this section, and I had already indicated how you are to ask the questions by raising your hands, those who are present here, and for those who are online, just to look for the question and answer section on your screen, okay?
Thank you, Linville. We have 15 minutes allocated for this section. As a housekeeping matter, we did hear some mobile phones going off during the earlier presentations. So may we ask you all to put your phones on silent so we don't have any mobile phones interrupting the proceedings going forward. Thank you. So we have questions from the audience and questions online, two formats. At the back, I believe we have Nicole Lobban. Are there any questions online? Okay, and we have questions in the audience as well here. Can you give the gentleman a microphone, please, and we'll take the first question. So we'll do some questions in the audience first, and then we'll take some questions from the... Sure.
Good morning, Mr. Chairman. Livingston, Young. What may your views on presentation? I have to ask one question. What are the plans going for 2026? Although we're not 25 still. For Puerto Rico and Jamaica, what are the plans, please?
Sorry, the question is for the chairman or for the chief investment officer? Sorry.
I need to come up. I might. Okay. Yeah, I'll stand nevertheless.
I can't come to you.
He has a mic.
I have a mic.
Oh, sorry, sir.
Yeah, thank you for that question. So, good question. The plans for Jamaica is pretty much more the same, which is we see a lot of opportunities in the Jamaican market, particularly because Jamaica's debt to GDP ratio is pretty close to falling below 70%, which is a far cry from when the debt to GDP ratio was 145% in and around 2010, 2011, 2012, right? So at 70% and below, Jamaica is going to approach investment grade in the medium term. And what that means is that the cost of funding for businesses and entrepreneurship in Jamaica is going to go down. The hurdle rate to do an investment that will generate a positive return for entrepreneurs it's easier for them to meet it. And therefore, all of this translates into far more increased economic activity. Of course, you will have, ups and downs, right? But if we are looking out and say over the next 5 years, what will happen with Jamaica is that the economy we expect to get a lot stronger. And therefore, a lot more businesses will be growing a lot faster. And for an economy to have fast-growing businesses, you need different forms of capital. And our form of capital is for companies that want to move fast and want flexibility. We provide speed and flexibility. So our plan is to deploy a lot of capital into Jamaica, which is why the United States Development Finance Corporation $10 million loan that we have, which is just a start, is dedicated to Jamaican businesses solely. And we intend over time, after we finish deploying that, to ramp that up substantially. So that's Jamaica. And for Puerto Rico, it's a $100 billion economy. Puerto Rico has way more revolving credit lines than us. We have about 8-9 million in revolving credit lines. They have about more than 10 times that amount, access to it. And so our plans there is simple, not just to grow the business, like you said, grow 10-20%, but to scale it. The scale is like you're here, and then you're doing this, right? And so that's our plans for Puerto Rico, to really scale that business so that over the medium term, that business can get to like 500 million US portfolio on its own, which obviously SCI being the majority shareholder means that we expect great returns for shareholders. One more
question, no, sir. The SYGNUS Alternative Investment, the companies will borrow the money from, you see, although we do business up and down, sometimes you make a profit and sometimes you can't give back the money where you borrow already. Do you ask them, you have to ask them or run to them for get back on the money or what? Do you have an explanation for this?
Well, the way how our process works is, let's say you own a firm and you want some financing, and we do an analysis of your company. We see the financial health of your firm, look at the track record, look at the management, etc. And then once the money is with you, then every quarter we are checking certain things, right? We're checking your financial statement, we're checking how the company performs, we're checking the industry that you're in, are there any headwinds coming up, we're talking with management, and we're checking your payment profile. And obviously from time to time you're going to have companies who meet challenges. We operate in an economy, you understand that. And the reason why SCI was created is to provide flexible capital. So sometimes when firms are going through challenges, we have to help them, right? And so that's what we do. But to answer your question specifically, yes, there will be times when companies get a come to Jesus moment, right? Which means that, they're not paying or they can't pay. And we have ways and mechanisms to work with them and help them. Because ultimately our goal is to help these companies grow and expand. That's why we are very different from, say, a normal bank, right? It's a completely different business model. You're welcome.
Sorry,
Just a second, Mr. Livingston. We're going to take some questions online. So, David, we can just point to
certainly.
Nicole. You have another turn, all right? Thank you. All right, go ahead.
So we'll take a question online. I believe Nicole is going to read the question to us.
Okay. This question is from Michael Nicholson, I have benefited from your dividend policy. At the same time, your full investment pipeline has me wondering if it might be a good idea to retain all profits to enhance investable capital and hence growth.
Jason?
Just a comment. So, that's an interesting comment, right? However, what I would say is that when SCI was started, we made a commitment to the shareholders who put their faith and trust in what was on a sheet of paper at the time, to say this business model is about taking your capital, being very creative with that capital, deploy the capital, make some money, and give you back very handsome dividends. Why? Well, because many investors, and we have found this across the Caribbean region, when it comes to investing, majority of investors are income focused. You have a lot of pensioners who used to, for example, invest in a lot of bonds, and those bonds blow up, right? While with SCI, okay, it's publicly listed, so the stock price will go up and down. Like right now, the stock price is ridiculously cheap. But the fact of the matter is, we are trying to create a platform where it's almost like a put your pot on fire kind of thing. You know that at a minimum, we're going to pay X amount of dividends. And so because of that fundamental promise and the premise that so many pension funds, who were the vast majority of initial investors who came into SCI, we can't renege on that promise. That's one. Second and final point is, when you look at the amount of dividends that we are paying out, 3.2 million that we are now, is a lot of money, but to SCI, it's not a lot of capital, because the balance sheet of SCI is 200 million, right? So 3.2 million out of 200 million, its percentage-wise is very low. So we don't see a big problem with paying out 3.2 million or 4 million or 5 million in dividends relative to a 300, 400, 500 million dollar balance sheet. Because that capital won't really impact SCI investment trajectory a lot. Because the capital we need to utilize, to deploy, we need hundreds of millions of dollars, right? So, good idea, but for the shareholders who are depending, on that dividends, we want them to enjoy, they want them to have their cake and eat it, so to speak.
Thank you, Jason. Do we have any more online questions? We'll take one more. Sorry. If you want to applaud, go ahead, yes. We have another online question, Nicole? Yes, we'll take it and then we'll come back to the audience here.
Okay, this one is from Brandon Thomas. The share buyback program allocated up to $9 million US over 3 years, but under $1 million US was utilized to date. Is it still the intention to deploy a majority or all of the remaining $8+ million before June 2026?
So that's a very good question, and one which I obviously cannot answer. Because if I answer it, hey. So, all I will say is that the share buyback program remains in place. Yeah?
Thank you, Jason. So we have a question from the audience. Yeah.
Douglas Wilson, shareholder. Just want to be clear. You may have answered it already. I wanted to know the thinking behind the share buyback program, which I think.
Very good observation and question. So, when SCI was conceptualized, right, at that time, there were no startup firms raising capital. I think maybe you had maybe one firm before. So when we came with this idea, and it was just an idea on paper, obviously, but even though we thought about it well, right, Ike? It was an idea on paper. when we looked at where we would have been able to raise the capital from, we had to focus on institutional investors, meaning pension funds. Because if pension funds don't give us no money, when we actually raise the capital the first time, the business would not have existed. That's simple as that. Because individual investors would say this is way too risky. I mean, you're gonna go into this space where banks are, and how you're gonna survive. You're gonna be too small, and all the negative things that you would expect with a startup, right? So to convince pension funds that we are convinced that this business model will work, we had to put some provision in place. And one of them would be, well, if a pension fund put in a lot of capital as an investor in, given how illiquid the Jamaica stock market is, if they wanted to exit, how would they exit? Right? So effectively the share buyback is a liquidity mechanism that we actually enshrined in the articles of the company. Meaning we didn't just, laba about it. We put it into the articles of the company, which means that once the time came, we did that to just show people that we are very, very serious people, and we're creating a company that is supposed to live on long beyond our lifetime, right? So the idea around the share buyback was around that, and then as we got to the point to do the share buyback, obviously we did our evaluation and our analysis. We looked at the firm, and after analysis, decided on the 9 million figure based on where we saw the firm and what we know the firm is capable of doing, and that remains the case today. So let's see whether or not the 9 million will need to be utilized, right? I mean, one of the benefits of having the buyback is, think about it, if the dividend yield on the stock is 7.7% as of last Friday, and if we were to go and, simple maths you can do, we buy, let's say, first we bought 50% of this stock at the price of 7 US cents. What would happen is that the next reporting period, the number of shares would have been reduced, right? So the existing shareholders, the shareholders who remain, if we pay the same dollar amount of dividends, those shareholders will get a lot more dividends, because it's the same amount of cash being divided up amongst fewer persons, one. And two, the earnings per share of the company would actually rise, because again, the number of shares have been reduced. So the share buyback wasn't just thought about in a vacuum. It's a multiple approach mechanism to solve many different problems. So as I'm explaining to you, it means that apart from providing liquidity, it also can increase the cash in the pocket of those shareholders who buy it for the income, and also can increase the return to shareholders who buy it for the capital gains, because obviously the earnings per share is going to shoot up. I say no more.
Thank you.
Thanks, Jason.
So we have equal amount of shareholders online as we have in the audience. So what I'll do, we'll take one more question from the audience, and then we'll return. I think we have about 6 questions online. So one more, and then we'll return.
Good morning again, Mr. Chairman. Livingston. You can turn to page 111, please. Financial risk management. Note D, credit. You there, Mr. Chairman?
Almost. Well,
right.
no, I'm not the chairman, sir. Apologies.
All right. The group. This is a group. Think the growth, extra losses allowance.
Sorry, can you just 1 minute? Sorry, I think Jason is trying to go to the page. What page is it again?
111.
Page 111.
111.
Yeah.
You there?
I am there.
All right, this is a group. It's a growth, extra losses allowance portion of assets. Now, the group upside, central, downside, perspective. All right, yeah. The one with upside down, upside. 13,246,937. You could explain to me in 2024, please.
Okay, this is no problem.
Next one, 1%. Not have upside. Central 1%. Downside 1%. Percentage 1%. Explain to me, please. 2024.
Okay. So, what that slide is showing you, or what that page is showing you, right? You have a credit portfolio, and you have $100 in investments. And what you're trying to do, you're doing what you call a sensitivity analysis. So effectively, what that fancy term means is, okay, if I have $100 invested, what happens if things go bad? How much of the portfolio would I lose? And if things go good, what's the upside? So effectively, that upside, downside, and that 1% is just basically saying if when you do your sensitivity analysis, how much money would you lose or gain from movements up and down? Let's say if interest rates went up by 100 basis points, which is 1%, or down 100 basis points, which is 1%. So it's not that we lost $132 million. It's basically just using that as a baseline and then saying, well, I want to know if I shock your portfolio. So just like how in COVID, our portfolio got a massive shock, right? But you see that even though the shock during COVID, we stand up firm, right? Well, the same thing. Every year, when the auditors do their audited report, they have to do this analysis, because what it does, it gives you additional information to see if there's anything lurking under the carpet that it doesn't come up, because we're showing bossy profit. So outside of the bossy profit, you have to look at the portfolio itself and say, well, what if this were to happen to the portfolio? How much loss would you make? And the opposite as well. If things go better than expected, how much additional gain would you make? So it's basically just a way to stress test the portfolio. See how much stress the portfolio can manage. And we passed the test, by the way.
Just one more question.
Sorry.
Thank you,
Can
Mr.
we-
Livingston.
yes.
Mr. Livingston, thank you. We go back to Nicole online now. Thanks, David.
All right. This question is from Roger Bassel. How quickly do you anticipate that you will deploy the new capital raised, and will this affect the dividend yield going forward?
Question, yeah. So, to answer your question, when we raised 50 million last year, we deployed this in about 3 months. And then we recycle the money, right? I mean, this time around, I could say that the money done already. But I won't. So, in other words, let me answer the question this way. SCI doesn't have an origination problem, right? We actually have way more transactions than capital. So one of the challenges that we are trying to unlock, or one of the things that we're trying to do, is figuring out a way how, for example, we could get a very large revolving credit line that we don't have to pay. Because when I challenge we're raising capital, when you raise a lot of capital one time, right? If I raise $100 today and the cost of that capital raise is 10%, for simplicity, I start paying 10% on the $100 today. But the $100 is going to take all 4 or 5 months to deploy out. So until I have deployed out all the $100, I have what you call a negative carry, meaning I'm making losses. Well, not losses, I'm not making the optimized return until I've actually deployed out all the capital, because I borrow the money at 10% and then I invest it at 15%, is when the whole $100 invested at 15% may actually start make a difference between the yield and the investment at 15 versus the cost and the capital at 10, right? And so what we want to do is to have a revolving credit line, which means we can call on the capital at any time versus have the capital sitting down and paying interest expense. That results, deploying out $33 million isn't a great challenge for us because we have approved transactions greater than 33 million. To give you the answer.
Thanks, Jason. We have some more questions online, Nicole.
Yes, we have another one here from
So we have a complicated formula that effectively we look at the net profit, we strip out the things that apportion to fair value gains because you haven't crystallized fair value gains as yet, is not cash. And that formula basically tells us, and we have a set threshold level that we use that to pay dividends. That being said, if you notice, our dividends don't normally move up and down. So even though our profit would be doing this sometime, our dividend isn't really doing that unbalanced. And that's because even in periods when, let's say, for this quarter or the 6-month period in focus, if profit is below expectation at that time, we don't go and then reduce the dividend because the formula, when you use the formula, it actually says, for example, we shouldn't pay any dividend. We still pay that dividend because we are looking at it as a medium to long-term trajectory, as what's the earnings power of the firm, and therefore can the firm maintain that dividend payment. So currently, that threshold gives you 3.2 million per year, and we'll see whether or not that will go up in coming periods once Puerto Rico start flowing cash back from their very nice, healthy net profit into SCI, that we can then just we'll just take it and pass it on to you as shareholders. So that's the concept behind the dividend. We may in the future create a threshold where we have what you call, I don't want to call it supernormal, but when we make extra profit on certain things that are one-off, we will have bonus dividends that we could, so you will know that if this year we pay 5 million dividends, the actual dividend that you should put the pot on fire for would still be 3.2, and the difference between the 3.2 and the 5 is because we made some supernormal profit. And so that's like gravy, right? But that's something that once we are making those adjustments, we'll communicate it. We always communicate everything to you shareholders, and if it's good or bad, we allow you to be the judge, you know. But that we use a formula that basically drive down on the real earnings power of the firm, and we pay that out to you. And as the firm continues to make more money, it means that, you know, dividends should follow suit.
Chairman, through you. So we are very conscious of time, and we're conscious of the time of our shareholders, both in-house and the persons joining us virtually. We're a little bit behind now because we have a lot of questions. So with your permission, I will continue with the question and answer section for 5 more minutes. We will take 2 more questions from online, and then we'll take 1 more from the audience. Then we'll move on to the vote because we are actually out of the segment. We have another segment though, but for those who are online and want to vote, we don't want to rob them of that. So we'll take just 2 more questions, 1 more, and then we move on to the voting. All right, moderator?
Sure. Just also to remind everyone that there is a second Q&A session that comes up after the vote on the resolutions and before the vote of thanks. So, go ahead.
Okay. This question is from Thomas Lamoth. Traded price for SCI share in USD has been divided by 2 since 2022. Is this accurate? And could you explain why?
So, when you say divided by 2, I assume you mean it fall 50%. Yeah. So, if that's what the JC website says, then yes, it is accurate. And that's why, so I mentioned the 7 cents in USD. Yes, it's accurate. I think on the J side, the record share price for SCI is actually like $28. And on the USC side is like 18 cents, highest ever. I think, if memory serves me right. So yes, that's true. And that's why I was saying I am amazed at the math that is out in the wilderness. Because I've seen lots of dividend competition and I don't understand how those dividend competition, because investors are buying, for investors who want, if you want dividends, SCI at, as the question said, half the price it was last year is a no-brainer transaction for all the reasons I outlined before. So to answer the question specifically, yes, that is true, and therefore it's a golden opportunity if you are interested in income and capital gains. Because as I said before, do not think of SCI as just a credit vehicle. Pure. It's just like any other company. It can do acquisitions. It can set up new business underneath it. It's just that all of those businesses and acquisitions are going to focus on the private credit space. But these things, as we go through time, will be down to the benefit of shareholders in the same way how we explained when we're doing the Puerto Rico acquisition. And we said at the time it's going to take a couple of years for us to work through all, the restructurings, etc. But now we are there, and I leave that with you.
Thank you. One more online question.
This one is from Jermaine Brown. I've noticed the panel lacks gender diversity, as there are no women present. Could you please share SYGNUS's policy on diversity and inclusion?
Well,
you want?
So I wish the person could see in-house, but let me state the policy on that. SYGNUS Group has a policy where we have at least 20% of our boards and our leadership that are female. Our female director, Hope Fisher, was unavoidably absent in person, but she's actually online. And as a policy, all our boards have at least one female member. Right now, across the group, we have, I think, in total 17 directors, and we have 5 females. So just to show you that diversity is enshrined in our policy. Let's take a look as well at our senior leadership. Our senior executives, we have 9 senior executives, and we have 4 females sitting at the head of the company. So I think if you should look across entities in Jamaica and even the Caribbean, I think SYGNUS is one of the most diversified entities you'll see. We are strong on empowering women. We're strong on ensuring that women capital is launched and is accessible by females. As we speak now, and I think Jason mentioned that briefly, we have launched an impact fund, and one of the main philosophy of that impact fund is to ensure that women-owned businesses are empowered. Right as we speak now, our head of risk, Yashi, is developing policies to ensure that the object of that entity is actually fulfilled. So I thank you for that question, Jermaine. And if ever you see where we're lacking on diversity, please call us out. All right? Thank you.
And I believe the fact that the question was answered by a female tells its own story as well. So thank you, Sarah Lynn.
Good morning, everyone. Carrie Berry from Maybury, not representing the company. I am not a shareholder. I've asked permission to ask a question. Good morning, the board. Can you turn with me to page 21, please? What I'm looking at here is 2023-2024 summary of results of operations. I noticed that the interest income has gone up, a touch, but interest expense has almost doubled. I just want to know what is the reason for that. Going down the table, we're looking at foreign exchange gain dropped dramatically, and impairment allowance, is that, am I reading it correctly, dropped from 844 to 3669? And tax credit, what is the reason for the negative and then the positive, that massive increase in the tax credit? I'm just looking for more clarification on this table and wondering if I'm reading it correctly. Thank you.
Yeah, good observations, good questions. So the first one, you're asking about interest expense doubled. That's very simple. SCI would have took on way more debt in 2024 than in 2023, combined with the fact that interest rates went up by about 600 basis points over the period. So that combination meant that interest expense would have gone up. So that's the first part of the question. Does that answer that part? And then what?
Hello?
Yep.
How are you seeking to bring that down?
Oh, very simple. Interest rates have started to go down, right? So our use of debt is still going to go up. So it depends. You're going to have a little transition period between if I borrowed $10 at 10%, right, this year, and then next year, interest rates go down from 10% to 8%, but I now borrow 30 million. Even though interest rates have gone down, my interest expense is going to be higher because I'm using more debt. And so the question for us is not really whether or not the cost of debt has moved up or not, or moved down. Markets will do what markets do. Our focus is the spread. How much spread are we generating above the cost of capital? So as I explained previously, if I borrow $100 today, I start paying interest expense on it, the whole $100 today. When I'm deploying out that capital, if it takes me 4, 5, 6 months to deploy out the capital, I'm only going to start earning, let's say, the 15% on the total amount after 4, 5, 6 months. And so you're going to have what you call timing differences between when you look at interest expense, how it's recorded on your balance sheet, versus the interest income and how it's recorded on your balance sheet. Because you're not going to get the full benefit of the interest income until after you have deployed all the capital. So that will always be an issue once we are raising lots of capital. Every time you raise lots of capital, you're going to have that dissonance. The good thing for us is that we actually increased our net interest income. There are many firms who are in the credit business who, when you look at their net interest income or their net interest margin, is very, very thin. But we are not worried by it. We are fine with interest rates going up or down. So that was your first question. You asked a question about FX. Well, no, you asked a question about impairment allowance and why it fell. Very simply, the impairment allowance was cut in half because the previous year would have reflected, reflected the write-off of the Cayman asset that we would have invested in the previous year. So that is why we don't have that bad asset in the balance sheet anymore. So one of the beauties about getting out of a bad transaction is that following year, your comparables look way better than they were before. In terms of FX, FX gain and loss, as I tell people, the reason why we present our result of operations in this table and don't replicate what is in the financials in the same manner is because we are trying to give you context. So the things that fall I'm going to call them anything that you see below net investment income. We don't have full control of those things, and FX is one of them. We're not in the FX business, right? We don't have a foreign currency, Cambia or anything investing in FX. FX will result from this natural course of business of the portfolio. So if we raise capital today and we convert or change that capital, or we invest it in a US dollar company and the exchange rate move and give us a big gain, then we celebrate hallelujah. If it results in a small gain, we say at least, if it results in a loss, it's not a crystallized loss. We are fine, right? Because we know that over the life of the investment, we'll make money on it. So we don't try to manage the outcome of what the effect is on our income statement. It's just as a result of the transactions that we will do. What we do, though, is ensure that our balance sheet is a US dollar balance sheet, meaning at all times we are representing net US dollars. So if the currency appreciates on us, we're going to book an unrealized loss. If it depreciates, we're going to book an unrealized gain. That's just the nature of our business. But we are not in the FX business, so we don't really watch that number. For us, it doesn't mean anything. What was your other question? Tax? Oh, yeah, man, I explained this one, So that taxation charge in the previous year is, as a company, we have to pay tax. The reason why we have a huge gain is because of the restructuring of Puerto Rico by the innovator. That's what is the innovator, right? So we actually have 13 years to utilize a certain amount of tax credit. And this amount that you see represents the first year utilization of it. And the future utilization of those tax credits depend upon the profit performance or lack thereof of the Puerto Rico business. So if the Puerto Rico business make more money in the 24-25 financial year than in the previous financial year, you're going to see another line item and so forth and so on. But you're welcome.
Thank you, Jason.
Thank you, Jason. Yes. So that concludes this first of two Q&A sessions. At this moment, I'm going to invite back the chairman of SYGNUS Alternative Investments, Mr. Linville Freeman, who will take us through the next items on the agenda, which are the votes on the resolutions. Linville?
So we will, having had the auditor's report and the report from management, we now ask for the resolution relating to the audited financials to be adopted. So let me read it for you. So I will now formally present that resolution, that the audited financial statements for the year ended 30 June and the reports of the directors and auditors thereon, circulated with the notice convening the meeting, be and I here adopted. So the resolution is being asked. The issue is that we're asking that shareholders now vote on the resolution. So for shareholders attending virtually, we ask that you register your vote on the e-platform as we explained before. And you'll have 2 minutes to do that. So once the screen pops up and you see the facility to vote, we ask that you vote and you have 2 minutes to do so. For shareholders attending in person, we ask that you show your hands and then Mr. Foreman will tally the vote, as you show your hands. At the end of voting, then I will announce whether or not the resolution has been voted for or against. All right, so shall I say then that the resolution for the adoption of the auditors is now on the floor, and we ask that shareholders show of hands as to those who are voting for and those who are voting against, right? So shall I have, first of all, those who are present, resolution to adopt the financial statement as presented and management reports as presented by the auditors. Resolution on the floor.
Please keep your hands up with the red armband.
Yeah, those against the resolution for the adoption of the financial statement?
Those against?
Against? Those who abstain? All right. And then those who are online, we give you, an additional minute now to cast your vote on the e-platform. So once that information is collated, Andrew, you will let us know what is the outcome.
There are 41 votes in favor and none against.
Okay. So the motion, based on that tallying, the motion has carried. And so the auditors, the financial statements and the auditors and management report thereon have been accepted and approved by the AGM. Okay, second resolution, that the interim dividends per stock unit of US $0.0026 paid in April 2024 and US $0.0276 paid in November be treated on the recommendation of the directors as the final dividend for the year ended 30 June 2024. So we have two dividend payments, one in April and the one in November. We're asking that for a motion that these amounts be treated as final dividends for the year ended 30 June 2024. So the motion, the resolution is now on the floor. So can I see the show of hands for the
show of hands
for those present?
Red armbands.
And for those on the e-platform, remember you have 2 minutes to cast your votes once you have the pop-up screen.
And those against?
Yes, sir. I think management is taking a note of that, and the directors. The other thing I need to tell you, shareholder, is that if you need additional dividends, the share price is low. Buy some more shares. That's nice. Nice to know. Nice to know.
There are 49 in favor and 1 against.
Okay. So again, based on that tally, the resolution has been voted in favor. And so the dividends, as stated, have been approved as the final dividends for the year ended 30 June. Okay, the third resolution is the election of directors. So we have 2 directors that are to be elected. Articles 149 and 150 of the company's amended and restated Articles of Association provide that 1/3 of the board, other than the managing director if one is appointed, and directors appointed by the holder of the special share, if the number of members of the board is not 3 or multiple of 3, then the nearest to 1/3 shall retire from office at each annual general meeting. The directors to retire every year shall be those who have been longest in office. The directors retiring under these articles are Mr. Ian St. Williams and Mr. Horace Masada, who, being eligible, offer themselves for re-election. Resolution. So the resolution A is that Mr. Ian St. Williams, who retires by rotation in accordance with Articles 149 and 150 of the company's amended and restated Articles of Association, and who, being eligible, offers himself for election as a director of the company, be hereby re-elected as a director of the company. And Andrew, we'll take this one first. We vote on this one first, and then we vote on the other one.
That's correct, Chair.
Yes. So, can I have a show of hands for the re-election of Mr. Williams? And of course, those who are online, the pop-up screen
And those
will be
against?
there. Any against?
There are 51 votes in favor and 1 against.
Okay, motion carried. So, congratulations, Mr. Williams, you have been re-elected. All right? And part B of that resolution is that Mr. Horace Masado, who retires by rotation in accordance with Articles 149 and 150 of the company's Articles of Association, and who, being eligible, offers himself for re-election as a director of the company, be hereby re-elected as a director of the company. So can we have a show of hands for the re-election of Mr. Masado? Those who are online, the pop-up screen will be there, so can you cast your vote?
Thank you. And those against? 45 votes in favor and none against.
Okay, so the motion or the resolution has been carried in favor of Mr. Mesado being re-elected. Mr. Mesado, congratulations on the re-election. Okay. Resolution number 4, that the amount shown in the audited financial statements of the company for the year ended 30 June 2024 as remuneration for the directors for their services be and is hereby approved. So it's the approval of the remuneration of the directors as shown in the financial statements. Can I see the hands of those who are in favor for the approval of the directors' remuneration as stated in the financial statements? Online voters, please use the pop-up screen.
And those against? There are 44 votes in favor and none against.
Okay, all right, thank you. So the resolution stroke motion for the approval of directors' remuneration has been duly passed. All right, and final resolution number 5, appointment of auditors and the authorization of their remuneration, that KPMG, Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company to hold office until the next AGM at a remuneration to be agreed by the directors of the company. So those are in favor of the appointment of KPMG as your auditors, please show hands.
1, 2, 3, 4, 5, 6.
Voting for the appointment of KPMG as your auditors for the next year. Online voters, pop-up screen will be there for you to vote.
Those against? Thank you.
Okay, all right. So now that the voting is completed, we are...
Chair?
Yes?
Just to tally the online votes.
Okay, okay.
Chair, there are 48 votes in favor and none against.
Okay. So KPMG, congrats, you've been reappointed until the next AGM. All right. So the formal business and the resolution section has been completed. And so we're now going to have another Q&A segment. Cyrilin, for about 15 minutes, another Q&A segment. So feel free to ask any additional questions you might have. And then thereafter, we're going to be closing off with a vote of thanks.
Okay, once again, we'll take questions from online and come out to the audience. So, Nicole, do we have online questions?
Yes, there are a few here. So this one is from Jerome Morgan. What is the interest on the loan from the U.S. entity, and what is the tenor of the loan?
Very good question. I see everybody come out very sharp this AGM. Tenure of the loan is 8 years, and the interest is variable rate interest. So it will depend on SOFR, which is a international benchmark for interest rates, at a spread of 495 basis points plus SOFR. So at today, that would be, I don't know, maybe almost 9%, 9.22 at current. But the transaction hasn't closed as yet, so we haven't drawn down on it yet, and rates are heading down. So hopefully over the next 4 years, rates head much lower, and that cost of capital will come down substantially. But that's the first of many, and as SCI gets bigger, and hopefully we get upgraded by Caracris, if you are watching and listening, then the cost of that capital will come down, and it will open doors for us to perhaps finally get one single credit line from one financial institution for $100 million, because that's the holy grail. That's what we're in search of. So hopefully we get there sooner rather than later.
Thanks, Jason. Another question online, Nicole?
Yes, we have 3. So this one is from Scotia Investments. How is SYGNUS mitigating the current local and international economic headwinds as it structures its portfolio's duration? Second part of the question now. Is the company expecting rates to continue to decline, pause, or increase given inflation risks from the US?
So, good question. I'll answer the last part first. In a sense, as long as we don't have a massive recession, because SCI is we're not lending money, right? We are actually investing. And even though those two things seem like they are the same, they're not the same. So the way we look at the markets now is that in Jamaica's case, I expect rates absolutely to go much further than where they are. Why? Well, because the base of the economy is weakening, even though from a macro perspective, the balance sheet of the country is extremely and exceedingly strong. And so to stimulate demand for financing, the only way and to get more growth, one of the main tools in the toolbox will have to be that rates will have to come down further. Otherwise, the economy is gonna suffocate. And I say that in the context where inflation in Jamaica is primarily driven by imports, right? We import the inflation. I mean, if rainfall in St. Elizabeth, which is where I'm from, by the way, then it affects our inflation rate substantially, because vegetables and fresh produce is a large part of the CPI index in Jamaica. The way I know this, I used to be an economist, right? So, yeah, it's my little area of expertise. So, with oil prices coming down, with Mr. Trump in office, so you have threat of tariffs that could conceivably push up rates, but you also have the fact that productivity is increasing in the US. And typically when you have productivity increasing and you have more technology being used, then that typically drives the other input costs down, right? So the way I see it is internationally, the Fed might not move as aggressively as some people are expecting. They may pause, but I fully expect them to cut in March. And then they may wait and see, right? And who knows what that will be. But ultimately for SCI and our portfolio, as we demonstrated during COVID, when everybody thought that our portfolio would blow up, it didn't. In fact, it grew. We made a record profit during COVID. Why? What's the difference between a bank portfolio and SCI? Well, we provide flexible capital with speed and precision, and the entrepreneurs who want the capital will pay a premium for SCI's capital. And once we do our homework properly, like we have done, obviously, we have very good clients on the balance sheet. Of course, sometimes you'll have defaults. That goes without saying. Everybody experiences defaults. But we're not, at this point, we're not really concerned about the path of interest rates for Jamaica and the Jamaican market, which is the second largest exposure that we have, because Puerto Rico is the largest part of our balance sheet. For Puerto Rico, we're not worried about Puerto Rico for the next 4 or 5 years. Why? Well, because Puerto Rico has about $50 to $100 billion in earmarked capital for infrastructure spending, because they were in a deep crisis for over 2.5 decades, and they just came out of it in 2022. Literally, we acquired the acquisition in Puerto Rico February 28, 2022, and March, Puerto Rico came out of their financial crisis and default, right? So, timing of the Irish. That's my term. So, to answer the question, international markets may cause some amount of uncertainty, but as a private credit investor, we love uncertainty. We thrive in uncertainty, actually. And I think the 2022 annual report, if you go back and read that report, we went to great lengths to explain why private credit firms thrive when there's uncertainty. And the simple answer is because capital comes at a premium during those times. Banks take depositors' money. And so they have a very, very different structure and perspective versus SCI's money. SCI money is forever money, right? We have permanent capital. There can be no... People can't come to SCI and say, oh, I want back the money. That's not how SCI is structured. So, to answer the question make sure I answer all of the questions that were asked, if 3-part or 2-part. Interest rates coming down is not a problem for us because we were in a 0% interest rate environment and we made record profits during that time. We just experienced a high interest rate environment, we make record profits. We were in a very high inflation environment over the last 2-3 years, we make a whole heap of money. If we go in an environment where inflation is more subdued, it doesn't matter. The thing with SCI that we are solving problems that entrepreneurs have. So the only time SCI will have a massive problem if entrepreneurs stop needing flexible capital, right? Or we have made very, very bad choices about what assets we put on the balance sheet. And of course, we won't get it right all the time. But the question is, the process that we have in place from those who go out and do the hunting, right, have a relationship with the clients, originate the transactions. Those transactions come to our screening committee, we screen. Same process like what all banks have. It's just that our process is more flexible and faster. And then the approval process. And the persons who are involved in maintaining the relationships are different from the persons who are making the investment decision. And we have independence in our governance structure. So I'm saying all of that to say markets will go up and down. We're not really worried about markets going up and down, right? What we are more concerned about and what we do is to ensure that we build very strong relationship with our clients. We know the clients, we know what they are going through. Not that we have any crystal ball, but we identify when risks are coming up on the horizon for certain sectors, certain industries, certain clients, and we work with the clients to try to mitigate those in advance. There will be situations where we miss the mark and we make decisions that don't turn out the way we expect. Happens to everybody. The key is we go through COVID and our crystallized, realized loss is 0.23%, and if you include Puerto Rico, is 0.16%, and that I believe is, I don't know which institution has that. That's an impressive loss rate, and we hope that as we go through time, we'll maintain that. So I hope I've answered the question. If I have not, just ask it a different way and see if I can give a more nuanced answer.
Thanks, Jason. I believe we had 2 more questions online.
Yes, both these questions are from Brandon Thomas. Have any of the local banks been open to giving you a much larger credit line in line with what's needed?
You want to get me in trouble, right? So the way I answer that question is, we have very good banking partners and banking relationships, right? But we operate in a different market. Our market is very different from how, let's say, the US and developed markets work. For whatever the reason, right? So we are still open and hoping and discussing and negotiating with commercial banks to give us a big line, like what we have in Puerto Rico. One single entity in Puerto Rico, before Puerto Rico got that expanded credit line, they had $50 million, $60 million in a credit line from one single institution. We have 8.6 million. So I'm still waiting for that knock on the door or that telephone call to say, yeah, you know. But we're working with our financial institutions. Sometimes it's just if you have a risk culture where certain transactions you just don't do them, and if that's a risk culture, that's a risk culture. But we are not letting that stop us, right? We have opened the door to international financing, DFC giving that guarantee, World Business Capital giving up that first international facility, and we are working with other multilaterals. We're in discussions with them, and we hope we can expand the relationship with the DFC and World Business Capital and let that perhaps one day become $100 million and have revolving lines and all of that. That's, you know, if there's a door that we see closed, we're not going to say, boy, the door is closed in our face. We're going to find a way around the door, under the door, over the door, or if we need to, we kick down the door and go through it. So I think that eventually we'll get those credit lines, because having a credit line is very, very different from saying you go and raise a bond. Because of what I explained before, the capital is on call, you don't have as much interest expense because you only use it when you need it, and after you finish it, you can put it back and enjoy it again. Very different. So hopefully we get there.
Thanks, Jason. I believe there was a second question, Nicole.
Yes. What's your projected dividend yield once profits from Puerto Rico is added and passed on?
Everybody is at it today, yeah? So I won't give any projections on that for obvious reason. But what I would say is that we committed to a high threshold of 5% minimum on the APO price, right? And it's not a target, it's a minimum. And I think last calculation we're at that minimum at 5.2%. So do the maths, right? If Puerto Rico is making, let's say if you kept that 4 million that it made last year and you kept that and you project that out, and Puerto Rico is, I think they're recently going through what a dividend policy should be, how much dividend they should pay out of net profits, which we'll inform our shareholders of that once that is crystallized. Then if you were to even its simplest sense, say you take 25% of that, let's say, then 25% of 4 million give you a particular figure. If you take tax out of that, you know how much dividend SCI is paying now, it's 3.2 million. So I leave you to do the math. But I'm not making any projections. I don't want to put my foot in my mouth. Yeah. But what I would say finally is that if you were to go online and type in, let's say, any private credit company that's publicly listed in the US, you'll see that their dividend yields are, north of 8 and so forth %. And I'm talking about you could just go and buy this stock and you would get that dividend. Right now, obviously, SCI stock, we're trading, and what the dividend yield on it is ridiculous. So if you assume that that gets adjusted by wise and discerning investors, then going on a go-forward basis, the yield should be, let's say, between 5 and 10%, right? So, but I leave you to do the maths on it.
All right, thanks, Jason. Are there any more questions? There's one in the audience here. Sorry, we have two in the audience. Shall we take... But we have... David Rose, go ahead.
Thanks, David Rose, shareholder. So, I think the first question of pertinence is with respect to one of your previously defaulted clients, MV Cayman. So in December, they sold the property on Treasure Island for about 8.6 million KYD. I know that is still an ongoing legal process in terms of the winding up or the liquidation. But what's going on with respect to SYGNUS, because I know that you had mentioned in the past there was an external credit guarantee, but with the asset being liquidated, this being real estate, what does the prospect of recovery look like now? Yeah, Mike.
Tech 135. Yeah. So as I said, constantly, every AGM and every earnings call, my expectation on MV Cayman is like, I don't have any expectation. If I get back some money, yeah. And honestly, with a distressed real estate asset, if you ask me, I would tell you that we're not getting back any money. Obviously, I don't want to say that publicly, because then, right, you create moral hazard, right? But to be honest, I'm not, as I said, consistently, it's gravy if you get back anything. That's just one of those transactions that COVID came, island closed. Yeah, we have moved on from that. We don't expect, well, I don't expect any capital, any money, any recuperation from that.
That's understandable, but have you engaged or been updated by your team in Cayman with respect to that process?
Yeah, man, but I mean, I said before, the debt load of the company relative to what the asset sale is going to be, it's sold at very distressed valuation. We know what the debt load was, so I don't see, if the figure that you quote is correct, then there's no money to come back to SCI from that, right? Because the senior creditor had like 18 million. So unless that thing gets sold for above 30 million, we ain't getting back a dollar. Which is why I keep saying from day one, it really would depend on somebody coming and buying it at close to market. And if I was an investor and I see an asset that's in default, then I know what I'm going to bid on it, right? So
no, so it's not necessarily that you're just not looking back at anything, but it's just that I saw the development and I wanted to know what SYGNUS' stance was. And even with respect to Mystic Mountain, you got back that recovery already?
That process is still working, but we're almost there.
Oh, so it's still ongoing?
Yes. Very long legal process.
And the mining company?
Huh?
And the mining company?
No, that mining company was still going through that process in terms of claiming on the assets. But the Mystic Mountain, we're almost there. Almost there, but we're getting back our money though.
No, so that's perfectly fine. That's perfectly fine. So, you know, my next question is, why doesn't SYGNUS cancel its treasury shares that it's currently holding from the buyback?
Why we cancel it?
Why you don't cancel it?
Why we don't cancel it? Well, I mean, it may end up being cancelled, you know. just a question of timing. It's not affecting anything, though. Whether we cancel it or not is just a process.
Understand.
So we have, yeah.
And then my next question is with respect to the Q1. You would have redeemed the Class A and Class B preference shares and issued into the preference shares. The issue used to Class A and Class B?
Go again?
Did the issue used to Class A and Class
B? No, H and I.
No, I'm talking about the one from up to the September period. Because there was a repayment, there's a proceeds from preference shares of $6.51 million and a repayment of $3.27 million US.
Yeah, we rolled some of those pref shares.
And you raised more in that same period.
And we raised money from different set of pref shares, which are perpetual, because those preference shares are term pref shares. The new pref shares, H and I, those are perpetual, which get counted in the capital stock of the company.
No, but H and I came out in December. I'm talking about up to September. H and I came out in December. We're talking about up to September.
Yeah, man. So that's what I'm saying, that we rolled pref shares in September and issued a different set of pref shares in December, which is H and I. I'm not understanding the question you're asking. Maybe you need to explain it a different way.
No, so I can show the cash flow afterwards, if anything, from Q1. Well, let's continue.
Sorry, David.
No, man, let him continue. Let him continue.
You continue? Okay.
Yeah.
Okay.
He's asking good questions, you know.
No, it's good questions. I was trying to be fair to the other shareholders and those online, just in case we could go to somebody else and they come back to him. But yeah, David, continue.
So I was looking at the company's audited numbers and look under investments, and you guys have invested 1.5. Yeah, 1.5 million in the business impact fund. How is that fund going and the start of that, impact activity in Cayman? Cayman, apologies, Puerto Rico.
Yeah. So that impact fund would have deployed, well, it's still in capital raising mode, because the target capital that is trying to raise is 125 million. It's gone about 20 plus million already. It has deployed, I think, 14 million of that already. So it's doing its thing,
Appreciated. Yeah. Just two more questions, basically, quickly. So, all right. Final question, Jason? No, let's ask Jason final question. So, you would have alluded earlier to the bottom out of the economy in a sense. So with the relatively tight liquidity, the company having this substantial amount of fresh capital in its books, how does SCI expect to take advantage of the current economic climate, to structure great deals to make shareholders richer?
Well, I'm not sure how to answer that question other than to say, just in the same way we have been doing, and on the same trajectory that we have been embarked upon. We have a set of clients who give us repeat business from various companies. So you will have John ABC company that has 20 companies in its structure. And today, company A come, tomorrow company B come, next day company C come, etc. Or they refer John Brown from Mary Bones Corner or Mary Jane from John's Brown Corner. So we get a lot of not just repeat business, but referred and referrals amongst and between, because those persons are in the same economic environment. And so because of that, we know the companies on our balance sheet extremely well, know their business extremely well, and they pay us back our money, and we go again. So I'm saying all of that to say to you that at the current moment, we have like 30-something million in approved transactions, some of which have partially drawn down, and they're financing from us. Others going through documentation. Others we are financing acquisitions, and therefore, because we are financing acquisitions, the gestation period between approval and then to get to the end of documentation for them to draw can be longer. So I'm saying we have a whole, and in many instances we are providing bridge financing for, let's say, an acquisition, right? So I'm saying all of that to say all the capital that we have raised, we have made very, very good use of it already, or it's already, what's the term? It's already accounted for, because 1, 2, 3, 4, 5 companies have transactions that have been approved, and once the transaction is approved, we need to have your money sitting in a bank account so that when the documentation is finalized, we transfer the cash to you. So much of the same, and as I said before, we feel very confident about the economic environment, because we are not a company where if the economic environment starts to get worse, we are worried. We actually are quite happy when that happens, because the entrepreneurs who have business ideas that need to be executed, they need that flexible capital, and the only place, or the first place that flexible capital is going to come from is SCI, which is pretty hefty balance sheet at the moment.
Thanks, Jason. I appreciate your response.
You're most welcome. Anytime.
All right, sir. You have a question there. There's 2 more questions, so there'll be 1 more after this.
All right. Mr. Chairman, I go to college. All right, Mr.
Jason.
Mr. Jason, help me to understand. I go to college, but help me to understand. The Jamaica dollars, as a company with SYGNUS investment and credit investment, the Jamaican dollars value less than 3 cents to the US dollars. Now, we agree that we don't make enough money in the US dollars, but help me to understand. You say, because we're not doing world per export, right? I remember, so we do business in US and Jamaican. Help me to understand. We invest over the years. After a while, everything will tumble down, because we just spend US dollars, and our dollar not growing. We don't see not like 3% in growth in the US, in the Jamaican dollar. And help me to understand that a little bit, please.
All right, so you ask a very good fundamental question. Thank you for that question. So, in the first instance, SCI isn't a Jamaican company, right? I mean, we are standing here in Jamaica because SCI is listed on the Jamaica Stock Exchange, but SCI is a regional investment company, because we invest in like 9, 10 different Caribbean territories, right? That's the first thing. So we're not depending upon Jamaica alone. First thing. No. So what that means is that SCI actually generating hard currency cash flow from companies across the Caribbean region. Second point is that, yeah, the Jamaican exchange rate versus USD, as you say, the value is very small. However, there are a multitude of Jamaican firms who, for example, in the entire world, the Jamaican leg of their operation is the best in the entire world. And you have many times, some of those fast food chain companies, etc. When you look at the footprint and the revenue that they generate, even though it's Jamaican dollars, they are transacting in. When you convert it to USD, they make more money per capita than anywhere else in the world. So therefore, what I'm saying is that you should therefore not confuse the exchange rate versus USD with the capacity and ability of a firm to make real money. And there are many, many Jamaican firms who are making real money from investing in Jamaica itself. No, there are also other firms who they are Jamaican, but they have expanded their reach to the Caribbean and even to the US. And many of these firms are publicly listed in Jamaica Stock Exchange, and we provide financing to them, right? Some of which you know, some of which you don't know. So I'm saying all of that to say we have to separate the fact that the currency is at 150 something to, are there companies in Jamaica who are providing a service or selling goods that are making enough money?
Let me say it quick. Let me say this quick before.
Sorry.
Just, me buy cheese, the 2 SYGNUS investment, the real estate on that. We have to pay $157 work out that. Every time we buy the yourself, we buy the SYGNUS investment. Tell me if it makes sense all the while, because the kind of Jamaican dollar is something wrong, something really wrong. Because we need to upgrade our country and the dollar need to float more.
Well, my answer to that question is that the key to that is really two things. One of them is, the first one was to get a stable macroeconomy but bring our debt down, right? Because if you borrow too much money, then basically you have less money to spend on road, school, hospital, blah, blah, blah. We have done that first part already. So our debt ratio, the amount of money we borrow, now the way down, right? So the next step now is to solve a big social ill, which is crime is the biggest one. And of course, while we're doing that, we have to also invest in infrastructure, etc. So these things kind of take time to pan out, but I wouldn't give up. So me personally have tremendous confidence in Jamaican economy. If you look at, like, for example, the real estate sector, and every corner you go, you see people putting money in the ground, right? Now, the real estate market might do this sometime, but if you're looking over the 5-year, 10-year period, the fact of the matter is more houses are being built, more businesses are being built, more warehouses are being built, and that only means one thing. That means eventually there's going to be a lot more money to be made. So sometimes you have to be just patient. Whenever you see things get wobbly, if you have a long-term target, then that is the signal for you to take some more risk on Jamaica, because you will benefit from it over the long run, because other people might not see the opportunity now, and which is why I'm saying, to bring it full circle, SCI shares cheap.
One quick and fast.
No, sorry.
Just one quick and fast.
Sir, please. We have extended the time. May I suggest that you can have a conversation with Jason after we close the proceedings, to be fair to the other shareholders and those online. We appreciate your question, but unfortunately time is beyond us. So I just want to say thank you very much to Jason for the eloquent way in which he responded to all of those questions and all of the persons who gave us questions. So at this point now I'll turn back to the chairman, Mr. Linville Freeman.
Thank you, David. I enjoy the level of enthusiasm from our shareholders. Very, very nice. All right, Ryan. So we have now completed the formal business, and all that is left now is for us to thank you very much for coming, and I'm going to ask Ryan to step to the podium and say the vote of thanks.
Thank you, Chairman. In the interest of time, all protocols observed. Ladies and gentlemen, a pleasant good afternoon. Reflecting on the outstanding performance of 2024, we wish you all a successful and prosperous 2025. It is my distinct pleasure to move the vote of thanks for SYGNUS Credit Investments Limited and by extension, SYGNUS Group. Thank you to everyone who has joined us online, virtually, and here at AC Marriott Hotel. SYGNUS Credit Investments Limited is your company, and we deeply value your trust. We as a team with one common goal of delivering robust results assure you that we remain focused in building your trust, preserving and growing shareholders' value, as well as delivering excellent results. And lastly, paying you dividends. Thank you for considering and passing the 5 resolutions earlier this afternoon. To the Chairman, Mr. Linville Freeman, the Board of Directors of SYGNUS Credit Investments Limited, the President and CEO of SYGNUS Group, Mr. Beresford Gray, who has sent his apologies for not being here today. Thank you for your continued leadership in guiding the company to achieve these record results. We also express our gratitude to the investment banking team, investment management team, and finance team, led by Mr. Gregory Samuels, Mr. Jason Morris, and Mrs. Monique Anthony, respectively. Just three of the stewards guiding us along the path of our 3I principles, and also assisting us in achieving these outstanding results for SCI. The successful staging of events of this nature requires collaborative efforts all across SYGNUS Group. And so we now recognize those directly and indirectly involved in making this a reality. We extend our thanks to our Vice President and Head of Legal and Compliance, Ms. Serlyn Hudson, our AVP, Mr. Andrew Foreman, and by extension, our team, who has spent countless hours planning this AGM. We are now enjoying the harvest of their labor. Thank you to the formidable SYGNUS marketing team led by Mrs. Elizabeth James and Mrs. Renee Rickards, who invested much thoughtfulness and energy into curating and leading this production. Allow me to also single out the first-class team of innovators, practitioners, and production specialists who has built on the curated foundation. The team includes Sarah and her team from Simply Dandy, who created the agenda as well as printed the annual report for us today, which was written by Mr. Damani Reed and Miss Nicolette Bailey from our investment management team. As always, the report was well written and well received. We are beholden to the media for the positive coverage of the reports that we have received. And to the production team, capturing yet another historic moment for SYGNUS Credit Investments Limited, we thank you. We also would like to express our appreciation to the management and staff here at AC Marriott Hotel for their impeccable hosting and support of this function. To all our unsung heroes who played a crucial role in the success of the results of SYGNUS Credit Investments from behind the scenes by dedicating countless hours to our success, we thank you for your hard work. Finally, thank you all for attending yet another milestone annual general meeting for SYGNUS Credit Investments Limited, and we look forward to seeing you again next year. Again, I wish you a successful, prosperous, and productive 2025 as we remain focused, steadfast in delivering results and growing shareholders' value. Thank you. Good afternoon.
Thank you, Ryan. So this kind of brings our proceedings to a close. Just two quick reminders. For all our shareholders who have changed your email addresses or doesn't have an email address on file, we're asking you to make sure that the company has your email address so we can, communicate with you, can send you the annual report by email, etc., etc. In addition, for shareholders who are still getting checks, this is a digital age, so if you're still getting a check, the Jamaica, the JC SD can actually deposit your dividends check directly in your bank account. And what they need, if you are not having that now, you can go on their website and register to have your checks deposited directly in your bank account rather than having a check being sent to you by mail. Okay? So all that is now left to be said is just for me to say a big thank you for everyone. Thank everyone, the shareholders and everybody, for your patience. I know we've gone over a little in terms of the scheduled time, but it was worth it. And just for me to wish you all the best for 2025 and see you next year again right here for some more good news. Thank you very much.